We're here live for this week's episode of Talk.Energy Insights on Thanksgiving week. This is the Friday here, the November 26th. Got kind of a crazy day in the markets. Hike, how was your Thanksgiving?
Yeah, I had a great Thanksgiving. Ended up going out to mom's, so she cooked everything, which was nice. No cleanup, and actually sent me home with the smoked turkey, so I can make my traditional post-Thanksgiving gumbo, which I'll be starting after this. So make my own stock, and then a little turkey and andouille gumbo. I got to darken the roux just right. Chef D. Levine would be happy and pleased with the style that we go after. But that's a Friday after Thanksgiving thing we always do, plus decorating the house. So looked like your house is already decorated.
We're getting
parts
there.
of it.
Yeah.
So how about your Thanksgiving?
It was good. It was fun. We went and did my wife's side of the family for half the day, and then went over to my side of the family for half the day. Luckily, everybody lives relatively close, or at least our immediate family, so we're able to get it all in and see everybody. And the kids had fun. We had a really funny moment, and I may post the video, but they've got this little gator thing. It's like one of those little things the kids drive around in. It's not a real one. It's like a fake little, battery powered one that the kids drive in. And we looked over, and there was all the cousins. So it was like my three kids and then their cousin who's a girl. And all three of the older cousins were in the back. And my 1-year-old was driving it. And everyone was like, what is going on? And he was just driving it around with his foot on the gas. And it was pretty hilarious. It was kind of like an instant classic. And we luckily got it on tape. So
that's awesome.
Plus that one was pretty funny.
No, it's a wild day in the markets. I mean, we've got the COVID variant, which it's got to be more than I was looking at the data just beforehand. It's 77 cases in South Africa, 4 in Botswana, 2 in Hong Kong, and 1 in Israel. And you see prompt month down 17%, and the out months down 3%. It's definitely taking the wind out of the oil stocks sales. And these are traditionally buying opportunities. Like the stocks are, that's my bias. I actually just did a couple trades. I can't really talk about the oil side because I can't trade stocks, but I can definitely look at mutual funds, and actually bought some Bitcoin down as well. So I'm now a BTC holder on top of everything else I own. But yeah, it's a wild time. Like I mean that bit of a short sell kind of pullback that felt like it was kind of ready in the market. With a relatively mild winter. OPEC meeting next week. Maybe they don't. Maybe they swing and don't continue to add volumes. That could, change things. And I'd definitely not be short. I'd be leaning long at this point. Maybe neutral for a little bit to let things wash through. But man, there's a major gap down without really seeing the fundamental, supply demand changes. And what's interesting is you have these super cycle oil and commodity supply demand folks out there that wonder how hard they step back in to support after this pullback, all the $120 to plus oil folks. But I'll be curious what we see on Monday.
Yeah, I don't do a lot of I typically don't do a lot of individual equities. I've been kind of vocal about it. It's hard for me to ever decide, and I just typically have my stuff in kind of broader market index stuff. But I've been FOMOing on the, I work in like oil and gas. I have like direct physical exposure to natural gas. So it's like I probably shouldn't be buying directly equities in like individual oil and gas stocks because of all the existing exposure, plus the fact that I don't study it, plus the fact that, it's just I have someone managing my retirement and my other savings type stuff. But I've been FOMOing hard on wanting to get in to some oil and gas stocks. And I was this morning, as I saw things happening, I was like, I need to load up my brokerage and buy a couple things. But I know you can't give me individual recommendations. So maybe I need to try to find somebody to come on and do a spaces, one of these equities guys that can throw out some recommendations. But I just feel like now, like you said, would be a good time to go long. I think Bitcoin's a good buy too. I think that it's weird. It's supposed to be like a risk-off asset, or, uncorrelated, but clearly today it is correlated, or this week. It's been down already before this. So I don't know. I think it's a good time to get in and get some exposure because, like you said, I don't think a lot of things have fundamentally changed other than the 77 cases. That doesn't seem like a whole lot, but I don't know.
Yeah, I mean, it sounds like, maybe a little less or more mutations, and just kind of reading through some of the data, it's worth paying attention to, but it isn't worth this type of a pullback. So it's something else. Like it can't just be that, but yeah, there's this pullback feels like it's behind us now. So we're kind of ready to rally into the end of the year would be my bias. And these trading days after Thanksgiving, I remember a long time ago, once upon a time, Chesapeake put an at the market shelf out when they were kind of in their dire phase. And normally any news on the half day after Thanksgiving is, you get these types of wild rides, but this is definitely feels a little overdone as I think about things. But you got a little bit more time left if someone happens to be live to make their own choices. But I'd lean into this one.
It was 14, right? When we had it was Thanksgiving Day. Is that when the big cliff started?
It was exactly, right? Yeah. 2014 is was the OPEC meeting, and yeah, that was the beginning. So that is true. I guess that's 7 years ago. Yeah, it's a little bit of a sad day for me. 2 years ago, my dad passed away today, so it was a little bit of a sad day. But actually, it makes you thankful for the time with family and really just that opportunity. Like every day is precious, and what do they call it? That's why the present is called a gift, yeah, that's right. The present is a gift. I can't remember exactly the saying, but no, it's we'll decorate our house today. Kind of thankful for that. I made a run. My son had broken his phone at a volleyball game, and so got into Verizon and found out he qualifies for a free upgrade. So that was thank you, Verizon.
Nice.
Unfortunately, now I think my daughter and other son realize that they qualify for upgrades as well. So I'll have to go back at some point. But yeah, it's all good. I think we'll go look at some Christmas lights.
For sure. I was going to say, I think that a theme for this, and you've already kind of started, is just sort of, it is the day after Thanksgiving. I think we both have a lot to be thankful for. I mean, why don't you keep it going? You're talking about your family stuff, but what else? I mean, I think that this is just a good time of the year to reflect, and I'm definitely in the holiday spirit today.
You are in the holiday spirit. Yeah, basically the thing that is interesting is I've had like this new group of people reaching out to me from the past and even somewhat distant past. And so, some of the connecting around LinkedIn, Twitter, the podcast, I think, is definitely having its network effect. And I'm enjoying catching up with folks, candidly. And it's the verbal face-to-face or, actually talking to people as opposed to texting is something that I made an effort towards a couple of years ago when I got off all social media other than Twitter and LinkedIn. And I mean, it's just like that effort has definitely paid big dividends for me personally, and hopefully for them as well. Just knowing what's going on in people's lives and caring about it is something I'm definitely thankful for. How about yourself?
I have a bunch of stuff that I'm thankful for, so I can we'll go back and forth. I mean, maybe the easiest thing is that I'm just thankful for my health and my family and my kids. I mean, I don't post a lot of the kids on social media, but yesterday I couldn't help it. I posted a picture of the 3 boys. We're just so fortunate to have, just to have our family and, like I said, our health and getting everybody together. I think as I've gotten a little older, you try to appreciate these days, like yesterday, a little more than maybe when you're younger. It just kind of happens. And then as you get older, you think, I really need to take a moment. And we had 4 generations at my wife's house. Her grandma is 94 and she's in pretty good health. And we were able to have her there, and she was with the kids and playing with the grandkids, and everybody get together and have a dinner. And so it's really cool. I mean, I think it's easy to take that kind of stuff for granted because I've always grown up with a big family. I say big family, but we've always done things together as a family, whether it be Thanksgiving, Christmas. I know everybody doesn't have those traditions, and that was just something that really had to soak that in and try to look at everybody who was there and just be thankful that everybody could get together.
Well, and what a difference a year makes. I mean,
Oh
like
yeah.
just a year ago, not getting together with Mom and Pete just because of COVID, and no one vaccinated, no real clarity as far as where things were going to go and how quickly things were going to happen. And now, I mean, it's, at least in Texas, it feels pretty normal. We've got our conference coming up in a couple weeks. I'm kind of thankful for closing the Pickering merger, and I'm looking forward to the event. It'll be nice to actually get it behind me. I'd actually registered for a FINRA exam that opened the window about 6 months ago, and my window closes this next week. So I've had to study this weekend. That's one thing I'm not particularly thankful for. But if someone needs to know about the Securities Act of 33 or 34, I'm refreshing myself on some things that I needed. But yeah, that'll be good to have behind me as well. So
Real
no,
quick
it's just nice.
I was gonna say real quick on that topic. So you talk about the Securities Act, and this is it's kind of a random topic, but I remember we talked about it in the past how these altcoins,
Hmm.
like non-Bitcoin, kind of seem like they're securities. And I think that Michael Saylor the other day had a pod, and he said he was basically saying, "Look, I've been a CEO of a public company. He's like, I understand securities laws and looking at that stuff at all, or reading about it. And you're obviously in the equity
Hmm.
side. I mean, how do you think that it applies to some of these coins potentially? Could they be classified as securities just through your knowledge of how maybe the regulations or how it works?
Hmm.
Or is that just too complicated I don't know. I just figure you're studying it right
Well, it
now. So
depends. I mean, there's so many different questions of like where are they issued and how are they issued, and then where do they trade and who are they trading between. And so, like, I I mean, it's all a question, and then domiciling of what state or federal. Like, it's an interesting question of like where would a NFT be registered? Like, I don't. It's not the same as an S corp, C corp, LLC. I mean, it really. I don't know how it'd fit underneath the SEC. And then all trading could actually occur in foreign markets, and so, or really,
anywhere.
anywhere essentially. And so, it isn't actually on an exchange or something that'd be regulated by the exchange. I think the issue is for a U.S. person, we tend to fall under, I'd say all the anti-fraud laws will apply without a doubt. And so, that's going to be a consideration for just about anything. They haven't like written it in yet, but anything that is fraudulent, I think would fit underneath the, federal and state regulations. But going down into like how and who owns them and where they're owned and then how they actually trade, boy, it that gets pretty decentralized pretty quickly. And I'm curious how you think about that. But as U.S. citizens, it's something you got to be aware of because we get regulated, and I think that's something that could happen as the buyer and seller of those, as opposed to the issuer is the way I would think about it. The issuer
Well,
is a little different.
yeah, it's like if you get together, Max and Hike, and we built some kind of token, and then we gave some to you and me, and then to our buddies and whoever else, but that wasn't necessarily public. And then we did like a issuance or almost like an IPO where we launched this thing. And then now it's trading on platforms like Coinbase and others, right? And we've
Hmm.
got, and now it's getting pumped up. We're spending, marketing dollars and, developing it and changing it, releasing new versions. And we very much, it is decentralized on a ledger, but at the same time, you're very much controlling it. And maybe
Hmm.
you're issuing more, maybe you're giving out more to insiders, and people are selling and they're not disclosing it, and all this stuff's happening. And if you just take out the word token and put in there, equity in a company, it just all seems very much like, you have to be regulated to do that. But maybe because
Yeah.
it's just like not technically and part of, I mean, clearly the framework today doesn't fit perfectly for
Hmm.
it, but it certainly feels like securities with a lot of these.
It's kind of in
Tokens.
between currencies and securities, and then there's a dollar value and a size. Yeah, I'll think more about it. I haven't really read about it, but as I put it in the framework of the things that I've been having to study, yeah, really, it doesn't fit from the issuance from as an issuer. It's hard for me to see how that actually would fit, but
Yeah.
no, definitely interesting.
Anyways, do want to
Happy to
sidetrack
think
it?
more about it. No,
So more
happy to talk about it.
business stuff that I'm thankful for. Like, so this is the big thing, is that I'm just thankful that I get to just get to chase things that I'm passionate about. I'm thankful that I work with really good people. That's one thing that's huge, including yourself, Hike. I mean, I'm very fortunate that we've been able to get this thing together. I've been fun to do these every week. I want to continue to do them. And I've also kind of like, gotten like a mentor out of this thing too. I mean, I feel like you give me advice, whether it be online like this, live, whether it be correcting me via tweets that I send out, or whether it just be you and I personally via text or talking. And I think that I'm really fortunate to have not only you in this pod, but also just all the things that I've gotten to pursue this year. And then the partners and people like our employees at our company are just amazing. We're just really, really lucky. And I think it gets back to that thing you can take for granted. And it's just like, it's just great. I get to pursue the things I want to pursue. It's not always it's not always as great as it seems being in this position, but I wouldn't choose anything different. And so I just have to pause and whatever thing I'm disappointed about, whatever deal that I'm chasing or thing that didn't work out or whatever it may be in business, it's like you have to take a step back and just realize just how lucky I am. And so that's something else for me too.
No, I appreciate that, and I'm glad we've been able to do this as well. I like your energy and kind of the push. We keep saying it at some point when things slow down, which feels like they might a little bit after, maybe a couple of weeks at the end of December, we can actually plan a little time, because I do think there is an opportunity to make this actually bigger and more scheduled. I really enjoyed the conversations when we brought other people on to interview them and spend that time with them as well, where we can bring the platform up a notch. And then I do think that there's an ability where we should choose some topics and actually have some direct conversations, and maybe one of them is around NFTs, but where we do our own research and then come in and then hopefully some expert will come over the top when we say something wrong and start correcting us, because that's really the thing that I feel so blessed to be able to do, is just learn more. And I know a whole lot about the oil and gas space, and being able to share that knowledge this way is something that is beneficial. And I think I've had the same experience on Twitter. I'm glad I'm not anonymous, because I've actually had some good conversations offline because of the people that have reached out to me directly. And I think that's valuable. Like the anonymous nature is beneficial to some, I guess, if you're in a position where you're worried about being canceled or fired. But I'm probably most blessed where I don't really think that way, and don't really worry about that, even though it's probably a real risk for everybody in today's culture. But I just think as long as you're honest and straightforward, speak your mind. My grandpa Heikkinen told me once, I was driving you told that story about your 1-year-old driving the Gator. So I was on we had our tractor in the field, and I had the front bucket up as high as it would go. And I was in third gear going as fast as it could go. He ran outside and was jumping around and like trying to get me to slow down. I thought he was just waving at me. And I was probably about 11 years old, I would guess. So a little kid. And I pulled up, and he's like, "You were going as fast as you could in third gear." And I was like, no, I wasn't. And he looked at me and said, "David, you're smart, but you're not going to be smart enough to remember all your lies," and walked away, and like didn't say anything more. I was like, I'll never forget that lesson, which is, you can't remember. So just tell the truth and say the same thing. And then you never have a fear of, did I say this to this person or that to that person? Which in the stock market, I talk to hundreds of people weekly, and it's just a degree of there's no way to keep notes or keep your memory if you're not telling people just what your truth is. And that's kind of where this fits as well. So glad we're able to talk. I've learned a lot from you. I actually think that the way you conduct yourself on these interviews is phenomenal. And I think you actually have a great demeanor and kind of curiosity about you that's helpful. So,
well, thank you.
This has been good.
Yeah, definitely. Well, I'm excited to do more stuff like you said it. And we've said it a bunch. We really just need to hire or delegate. I got to get better at delegating, and same with the pod. Like I do a lot. I do some things that I'm delegating, but scheduling and, maybe putting some more structure around it. I did figure out a way to get, I think I can get transcripts now, at least through Riverside. That's one thing I want to start doing, is putting out transcripts. I want to update the website. I may even do I've been seriously toying with rebranding, just to say, and I've said this a bunch, just like the Max Gagliardi or MKG, which is my initials, like something just like podcast, and then have Talk Energy as like a show. And then and then maybe every other week it's just energy, or maybe when you and I do things, it's just energy. But I think that I want to continue to evolve with it, right? And so I don't want to be completely pigeonholed. I know a lot of people have been like, no, I love the energy angle. I know people in the Bitcoin world that have been like, I really like your podcast because I'm really tired of all these like generic Bitcoin podcasts, and you talk about energy and you talk about the mining stuff. And so they've told me that that's a good thing. But so I don't want to ditch that, but I also think that I could evolve, and maybe if we can put some more structure around what we're doing, we can decide on some branding decisions, some platform decisions on where we host this stuff. We need to get your socials linked up to the live stream, which I think we can do on Twitter. I think on StreamYard, I can maybe update it to stream on both of our stuff. I think I might have to pay a little more, but I think you can put more channels on it or whatever. So just things like that, like figuring out, you know, get a plan in place. And then we just need to, we're both too busy. We got to delegate or get somebody to help us, you know, like an assistant or somebody. I don't know.
No, I got an idea on someone we could hire. So we'll talk about that offline as well. But yeah, there's just that opportunity. One question I've got for you, like, what are you seeing on the gas markets? Like, we've had mild weather, like, you know, propane prices have pulled back. Like, do you think people are still, are you getting hedging in now that you've had a little bit of weakness through the winter? Is that putting gas down, or do you know anything about that just on the smaller side?
Yeah, you know, I pay attention to it a little bit. I try not to make price predictions like we've said. I feel like that it's going to be, I still feel like it's bullish for natural gas. I don't know next year if we will, like that question you asked me, if we'll average above $4. I hope we will. I think $4 in this $4 to $5 range is actually relatively healthy. You know, even like a lot of the noise lately with like Elizabeth Warren and others who've said, hey, gas prices are high. Well, it's like, look, we're still relatively low, inflation adjusted. And I still think that people will keep discipline at this kind of 350 to 450 range. I've been really surprised, honestly, that the cash markets have stayed. I don't know that we've had a day. Maybe we've had a day below four. Actually, I have to look. I don't look at it every single day. I try to. But most days it's been, you know, this $4 to $5 range, even with relatively mild weather. So I think it's going to be, if we get some weather shocks here early in the season, then I think that that's going to lift things up. I still think, regardless of the weather this month in December, I still think that there is a skewed chance to the upside in January and February, just because of where everything is at in general. But we'll see. I mean, the pullback in oil is, if this stays, and if we're, you know, somehow in the $60 or $70 range instead of 80 or 90 for some period of time, I think that I don't know how elastic that'll be on rigs, but certainly like higher oil prices to me give a slight bearish mood to gas, because if you look at where a lot of this gas was coming from in these last 5 years, there was a lot of associated there as well. So I don't know. I don't know that what guys are doing hedging wise. I know a lot of it, like we've talked in the past, is kind of mandated via whatever their cap structure is. A lot of times they have to do a certain mix. Certainly on these acquisitions that a lot of guys are doing, they are mandated to hedge some amount. And I've heard that you've got guys that are passionate one way or the other, but a lot of times they're just kind of, this is what they have to do. Even if it's a private company, primarily just from the lending side, they've got to do something. So I don't know how like dynamic or active guys are kind of trading in and out of things. I think a lot of it is just kind of like we picked our strategy and stay with it. So, you know, we'll see. I do think guys are getting more optimistic about gas. So it was announced this week, like Paloma Partners is signed to buy Goodridge, and those guys are, you know, we're not super public about who our clients are, but I did post something that those guys have been great guys to work with. We've worked with Paloma through the years, and so I'm excited for them. I don't have any clue on how rich or, you know, what that valuation looked like, but I know that they got the deal. It looks like they're going to get the deal done, and it also is. I'm bullish on Haynesville and on gas. So I think guys, their sentiment's changing. I don't know that people would be diving in and buying, you know, those types of assets a couple of years ago.
No, I think the key thing that I've been thinking more about, and a lot more about in North America, but even globally, you know, there's been whole like peak demand, peak supply, you know, whether or not that was twilight in the desert and all that stuff in the OOs. But I actually am thinking that we're in a peak deliverability world where essentially it's not that there isn't enough resource in the ground. I've been thinking about it from the standpoint of, you know, oil, natural gas, lithium, like a lot of different commodities. There's plenty of capacity. It's just that you've hit a peak deliverability. And so like if the US is going to be consolidated into fewer and fewer holders that are, you know, living with more capital discipline and trying to return cash as public companies to their investors. But, you know, we met with, I think it was 7 or 8 privates, and a lot of the private equity shops are doing effectively a dividend return back as well to try to get, their funds paid back in at least a one times money. And so like this peak deliverability is something that feels like is there, and we'll watch and see what OPEC Plus does next week. But it's this really, really, really interesting time of these decades long reversals of. I read something that at COP26 there's a comment that you were trying to reverse a 250-year cycle that began with the steam engine in 30 years, and you think about redistribution of wealth that could be decades long, climate could be decades long, the deglobalization that we're going through of all commodities. It's just this, we basically outsourced everything to Southeast Asia, and now we're in a Cold War between the US and China where we're bringing everything back home. All of that just is this like, huge amount of concentration of trying to bring commodities together to get everything rebuilt. And I just don't know if we can meet the deliverability, just given the cycle of how long it takes to bring big projects online, whether or not that is mines for, and what's been so wild, if you think about it, China, with what's going on the real estate side, and like we're seeing a tightening of, supply and demand without China really participating yet. And so like there's this like super cycle commentary but more not about supply, but really about what the world can deliver. And I actually think we're in this world of what happens in the first quarter. Who knows, like reinflation, new variant of COVID. We've got a policy cycle that's going through as well around Build Back Better and what happens there. But the 9 to 12 month view on commodities just is pretty darn bullish.
I like no, I agree with you. I like the deliverability concept, and it's almost kind of like some of the elasticity around spooling up supply, whether that be like we were just talking about natural gas, which clearly the LNG. It's funny, they were talking to or Elizabeth or somebody, Warren, I can't remember, said something like, why are you exporting all this gas? And someone tweeted like, these decisions were made like 10 years ago in some instances to build these facilities. This isn't like we just decided, but that speaks to this idea around ramping up deliverability, whether that be to bring new mines on for things like this EV, this big push with EVs or the renewable stuff. It's like, how long does it take to spool up? And even if demand is there, or even if there is capital going in, it's not super elastic. I mean, these things take time. And then it's like all the other supply chain craziness right now, that's going to impact it. And then really what's been the most fascinating thing probably to me outside of the energy stuff, which we're going through a really interesting time in energy, but just the Fed and the money printing and everything that's going on with the US dollar and the economy and the inflation right now. And we're kind of going through this big experiment. I think someone said back in the 70s when they raised rates, debt to GDP was like, I think that was the stat, debt to GDP was, or maybe it was, basically it was, I think it was debt to GDP was like 100 something percent. And then now it's like 3 times that in terms of where we're at and how much debt we have. And like, do we even really have the ability to raise rates? Like, what does that actually mean? Like, there's just so much going on. And to me, I think that trade, the inflation trade, is probably, I mean, I don't know that this is like a hot take. I mean, it seems like that could be the trade of this time period, right? Of the next however many years or decades potentially. Because I can't figure out a way that they're going to materially tighten. But maybe I'm wrong. Maybe they'll have to. I don't know your thoughts there. But it all kind of interplays. Everything, even the energy stuff, interplays with inflation and these policies.
The word inflation is a trigger for me if you get into actual economic definitions. I think we have clear price escalation.
Right.
And so like the push-pull on price escalation is where is the, like we're clearly pulling prices up even at the base labor level. And if you think about the commodities, most markets that people think about are financial markets, and they're driven by dollar flow. And so the commodities are physical volume markets. Like you measure it in barrels and kilograms, like you don't measure it in dollars as far as what the trade actually is. And that's why deliverability of commodities is more important than like rich folks with more dollars can't money whip a physical market. Like you can change the dollar value of that's traded, but you can't actually impact the underlying unit of the flow, which is the kilograms or barrels or MCFs. And so like what's interesting is physical markets are actually impacted by the poorest of people. And so if we're having wage inflation, like you still have to, you're still buying protein, you're still filling your car up with gas, you're still heating your house, you're still turning on your light switches. And if you have the poorest of people that are uplifted, then you can actually have more demand on the physical side. And so it's this, money printer go burr is the financial market side, but it doesn't flow through always into things that are measured in volume and weight. So just think about it that way. I know that's a little bit of a deep thought for the Friday after Thanksgiving and a half market day, but I think deliverability can't be impacted by dollars and more money printing, but it does get impacted by policy, and policy is slowing that, which then at some point that will flow through to not having enough to actually do the things you want to do, which is this onboarding of rebuilding things in the US or in North America. Like that's going to be the interesting point on where policy and volumes actually hit. So I
was gonna say, have you looked at like the Cantillian effect and like how they talk about how it basically is go ahead.
Can you define Cantillian effect?
I don't know if I can define it, but it's basically, I don't remember who came up with this, but effectively, maybe, I don't know if that's his name in the thing, but effectively it's like how when the money is produced, when the money is printed, it doesn't hit everything equally. And so it's going, and there's people that know about this and that have the ability to act on it quicker than other people, right? And so like for people, the people that are closer to the money printer effectively have the ability to price this faster than the people that are at the bottom of the trickle down. And so you made me kind of think of that as you were talking about consumers and what's happening, are wages rising, or how is this impacting normal people? And it is. And I think that people closest to the money printer, i.e. the financial institutions, are able to, and people that manage assets can get in here and exploit these, everything that's going on. And I mean, even at like a micro level, people like me with real estate, you can understand last year, okay, like rates are going to be low and they're printing money. Like, can I get into hard assets versus someone who's just maybe driving to work every day, not really paying attention to that, And so this Cantillian effect essentially is that the people that are the closest to the money printing or the closest to the new issuance of this currency will benefit the most. And this will also create distortions that impact everybody else. So it's interesting. It's just an interesting concept. I need to read more about it. A lot of the Bitcoin people like to talk about it, but
I just Googled Richard Cantillion, and now it's something that I can read after I finish my Series 79 stuff. But I think it's the reason I bring it up is when you hear inflation, I think we've got price escalation very clearly across the board. And that price escalation may be going up at a faster pace than what the wage escalation of the poorest of us are going up. And so the reason that's important is those are the types of things that slow down super cycles, because in a physical market, if you have more demand at that base level for building more factories, or and then you're trying to hire more people and wages are going up, then you get real inflation as well. Right now it feels, I know for sure we have price escalation, and that it's just this gap that I'm thinking a lot about, of the other side of what happens in this reinflation trade, because the majority of the world is on an inflation trade. And so I'm thinking through the opposite side with a lot of my time. And I'm not saying that I have an inflation bias. I'm just trying to think through where could that be wrong. But that's the net.
Seems like it's been kind of coiled up. Like part of it too is if you think about how much QE and things have happened, and then where the stated inflation rate by the Fed, it's maybe not, that's not the real inflation rate, but what's been stated. And some people that I've heard describe what's happening, you talk about, you hear the word transitory thrown around and people mock that because it's like, this is going to be continued and longer. But a lot of people look at it and they say, look, you can't look at like this year or last year, you got to look at like 10-year chunks and realize that even if we have like a period of a decade, even of really high inflation, if you average that out over some period of time, it's like, it still kind of gets back to this more normalized level. And I think the other day I was reading a deal and it said that since in the last 100 years, we've averaged about 6%. which seems higher to me than I would have thought, but it's just kind of the structure. It's structural with fiat, right? I mean, like over time as you print, like it's going to become debased, and that's kind of a shocking number because over a decade, that's a huge amount of purchase power loss. But again, I think maybe some of those periods are compressed, where we see times when you're really not seeing it as much, and then other times like right now where it's expanding and you're noticing it a lot. It's just a fascinating subject. I mean, I think it's so like the fiat monetary system is so complicated, and even like these. Like this is funny because all these economists, there's been like headlines coming out and they're like, no one saw this coming. And then people are like, what are you talking about? No one saw this coming. So there's like experts in it that say that we're saying that this wasn't going to happen. And other people, like laymen, being like, this is clearly going to happen. It's just a very fascinating topic to me.
Well, just layer this. So you've got 25 or 30 years of reversing globalization to deglobalization. And that's supply chain management. And that's what's hitting all the shipping costs, and you're going to hear about it all through Christmas whenever people don't get to buy the thing they want or it doesn't show up on time. And so that's going to be a really easy, call it hour to 24-hour media narrative that you can just hear again and again, that then flows into, policy of one thing that is clear is if you have capital, you've made money in the last 18 months by being in the markets. And so those without exposure to the markets, the wealth gap has widened, and as wealth gaps widen, that one way to solve that is deflating the value of wealth by having inflation and lowering that purchasing power. So and then that starts solving your own the issue of what our U.S. debt is and where global debt is as well. So there's a lot of reasons to say in the 12 months to 5-year view that you've got an uptick. But man, it's the overlay of redistribution of wealth, the overlay of climate, the overlay of deglobalization, and then the move where we're trying to shrink the amount of hydrocarbons that we consume, which have been the enabler for human expansion, whether or not that is feeding people enough or, building enough or, healthcare expansion. Ample access to energy is so tied to economic growth that you just don't see it talked about as much as it should be. It really is the center of everything. It's an amazing time to know about the energy markets because all of these things are fitting together, and then the associated commodities to enable these markets. There's just been long dated policies of not in my backyard that I think you're going to have to reverse because, I think silicon, lithium, molybdenum, aluminum, all those things are going to be needed. And mines take longer than drilling wells, is what I tell people. And so, it's not that there isn't supply, it's just you got to build the mine. And that's a 5-year time frame at a minimum. Right.
Yeah, that's all great. We need to get a guest on that can talk more about these topics. Last thing, and I got to jump here soon because we got other stuff we got going today, family stuff. But what about a book? So I threw out, I think I texted you the other day, like Jordan Peterson's book, 12 Rules, which I've actually read it already, but it's been a while since I read it, and thought that would be a fun one to talk about. Another one is Saifedean, the guy that did the Bitcoin standards, coming out or just came out with the fiat standard, which I'm interested. I mean, I know what his biases are, so there's probably, I could read it. I hear him talk all the time, so I know kind of his stuff, but that's a couple that just are that came to my mind. Have you read Jordan Peterson's book yet, or is that one?
I have. No, I totally
so we
have.
Both already read that one, so I don't know. Maybe that one we can do another one.
Have you read? Sorry,
you cut out for a second. What did you say? Yeah. You read what?
4 Agreements or Pieces Every Step or any of that philosophy. Okay, so we'll put together like one business book, one philosophical book, and we can go from there. But yeah, that'd be. We should do a January book club.
I tweeted about it one time, and people were like, that was like back when I didn't have any Twitter followers, very many at all. And that tweet actually got a lot of traction. Like a ton of people were like, if you did this, I'd be in. Okay. And then it's just like, how much other crap do I have going on? But I felt like if we could just incorporate it. I mean, I listen to a lot of books and I do a lot of podcasts. So if I can just low effort incorporate it with what we're already doing, then I think it would be the easiest way to do it. And it seems like people are interested. And I think it would also be a cool way to get engagement because you could put it out, right? And then people, if they want to, we could even do a Spaces, like make that episode of
Spaces would be fun.
we need to do more spaces. That's one thing that we've talked about. I did a few on the pod, and I think it's really positive. So that's another thing we can do. But all right, man. Well, I'm glad we got this one in today. I probably got to run. I've pawned the kids off. I need to go help out with them. But it was fun.
Good seeing you.
Yeah, it was good seeing you too. We'll talk soon. All right, see you.
Bye.